Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
I hear you loud and clear, Coach Jay. How we doing on Silver and Gold Monday?
Silver
Wow.
and gold Monday for sure. What a day. What a day in the markets for sure. Welcome everyone to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. This is our first time meeting. I'm Coach Jay, been a Topstep performance coach since June of 2023, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some experiences, some knowledge, and hopefully help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. You are our chat, our audience. Shout out to Dan Trader in the chat. Let's get into the markets. Not a lot of news today. Not a lot of news. I don't know that EIA number, the only number that was on the calendar, there was some other ones. There was some pending home sales and things like that. The big one was the crude oil number that they just kept pushing back every hour until they just didn't put it out, which I thought was pretty interesting. Maybe everyone's ready for the new year, right? And you say, you know what, we'll give you those numbers next year. Pending home sales came in. Pending home sales change month over month came in at 3.3%. Forecast was negative 0.92%. We had a Dallas Fed Manufacturing Business Index number come in at negative 10.9. Forecast was negative 6. Of course, the big news are the metals. We got silver making new all-time highs and pulling back. Gold close to its all-time highs, pulling back. Margin calls, banks underwater, over-leveraged. Anything you got on the news, Coach Paul?
No, the news was made over the weekend.
Yeah.
And there was a lot of talk, I don't know, on Twitter, on the interwebs about the end of the world and silver. And I don't know if it was the end of the world, but there was a lot of opportunity there if you could afford to trade it. We'll go into that later. No other big news on this abbreviated week. On thin volume in the equities, but on the news front, very small.
Not a lot of news there. So let's take a look at the quote board. We got 36 different markets we can trade with Topstep accounts today. To the downside, we had copper down 4.62%, silver down 6.91%, and platinum, our biggest percentage mover to the downside, down 14.89%. That is correct. Platinum was down almost, at one point it was down 15% today. High to low move, we had a $480 move, 18% in platinum. Took out 1, 2, 3 days of range, which sounds like it should be more, but we know the run that this market has been on. Platinum's up like 50. It was up 50% in 11 days. So this is a healthy pullback, but this market is still up 25% from the beginning of December, even with a 15% sell-off day. To the upside, we had all the metals, heating oil up 1.02%, natural gas up 1.68%, and crude oil, our biggest percentage mover to the upside, up 1.92%. To talk about our big four, we got the S&P down 0.37%, gold down 4.32%, the NASDAQ down 0.49%, and we mentioned crude oil up 1.92% on the day. We are going to start with the metals again, Coach Paul. We're going to start with the metals again. The metals are the show. Let's take a look at gold to start. Looking at gold on a daily, what are we seeing here?
Well, one of the things is we're saying that NASDAQ volatility is pale compared to the metals. Who would have thought that? Well, as we say, anything can happen, and it happened today. So first thing I look at that is engulfing candle.
Yeah.
It did gold make an all-time high today?
It did not last night. So it made an all-time high Friday, 45.84. The high of the day was 45.80, 130.
But that took out last week's. Let's take a quick look at the weekly. Let's see if it was engulfing in the weekly.
Yep.
Yeah, it took out last week's low. Double top at all-time highs. This rally, it looks like it's met I have a flair for the obvious, but it met some resistance,
For
mostly
sure.
related to margin and silver. And you mentioned talks of banks, and industry. I used to be in the steel industry. Things like this create extreme stress
Okay.
for banks, for the middleman to be able to deliver, um, to finance inventories, you name it. And when you get a margin raise like the CME did, it's a direct result of volatility. There isn't some sinister play. Maybe we'll do a whole session on the old silver squeezes of old.
Okay.
But here in the gold, it's definitely margin related.
Yeah.
It's one of the
It got more
it's the
expensive to hold a
biggest
position.
Yeah, well, if it's cost to carry,
Right.
it's not small.
Right.
One of the things here, when you're in a prop firm, you don't have to worry about margin.
Right.
Even on my personal accounts, this margin's so big, it stopped me from doing 2 micros.
Mm.
And it's so, but in the real world of why we have in the business world, that margin is the cost of doing business, the cost to carry. It rose significantly, forcing liquidations. On top of that, we have, what is it this week? The end of the year.
Right.
Profit taking. So it fed on itself. And there's an old saying, and farmers have, you can't stuff 10 pounds of manure in a 5-pound bag. And so the liquidation,
Yeah.
the selling, it's like a trap door. So you can see that early last night.
We
We had
could.
urgency in selling.
We did. On the 30-minute here, right off the open, that first 30-minute range opens up, makes the high 45.8130. Could not take out that all-time high, which we put in on Friday, and we can see the volume just led us to the downside. We tested the 200 moving average, bounced once there, but this was liquidation type of selling, and it really started through, to pick up during the New York session. We want to talk about the house count trade that we took, short opening range trade, but it started early. It started very early. A lot of times we're looking at, what does the Asia session say, but most of the volume was done right off the bat here in gold, which means they had to do it early. Let's take a look here at I just want to look at the shorter time frame to see where we did make that high. Okay, so the high was made on the first 3-minute candle. We could go to a 1 minute. I think the high was made on the first 1 minute. And if you think about it, right, what was the sentiment across the board on social media? It's like, oh man, there's a short squeeze happening. Everyone's, sell gold, or buy gold, buy silver, buy any of the metals because it's going to continue to go up. And when markets get a little too heavy on one side, sometimes we could see something like this, especially when, again, it became more expensive to hold those positions. So that first minute we made the high. And once we closed below that, that was it. And again, do you know it's going to sell off this way? Probably not, but it's kind of crazy to see that first minute candle where there was probably a lot of euphoria about where the markets were going to go. I'm sure people were looking at 5,000 in gold, and then the market makes everyone wrong. Sells off pretty aggressively here.
It's moves like that remind me of the story of in one of the greatest books about trading. If you haven't read it, I highly recommend it. Reminiscences of a Stock Operator. And they have a story in the trading rooms, which at that time, a lot of people entered into trading rooms. There was an older trader called Old Turkey. and he was a very successful trader. And one of the touts, or rumor, they called them touts, what we would do now with social media, ran into the trading room screaming, "Buy Anaconda."
Okay.
And he screamed, "Buy Anaconda." It sells, and he runs to this old wise trader and says, "Gotta buy Anaconda." And so first thing Old Turkey does is sell a large amount of Anaconda. And the tout freaks out. He says, "No, buy it." And the old guy looks at his fills and he says, "Sell more, a large amount." And the tout is losing his mind. He gets his fills back. Then he turns around and he doubles it to the buy side.
Hmm.
So he bought twice. So
Had to test it
what
first.
he wanted to see is he tested it and wanted to see how good his fills were. And he got filled really well selling it. So there's buying there.
Right.
That gave him confirmation. Yeah, this market is strong. In this case, it was testing to see if there was buying that was going to follow through.
Right.
It has that kind of flavor to it. And more in silver, which we'll go into, but in this case, it was buying. And
Yeah.
then liquidation started. Key was because that first couple minutes, it was strong. But there was key part, there was no follow through buying. What was the follow through?
All sell side.
And we can get that, which they didn't have 100 years ago. VWAP,
Right.
the greatest thing since, I don't know, but I think it's one of the greatest tools we have in trading. This is the live volume. And in that, what did, if we just removed the candles, we'd see VWAP telling us a tail. Kind of what Old Turkey saw.
Right.
Now, that's information. That's live, solid information. And remember, as a good traders do, they observe. We got a little more information, and the biggest confirmation to me was VWAP leaving the range. That was the kiss of death. For buyers, if you were sellers, it was a gift from heaven. Now, easier said than done, because, like I said, we don't have to worry about margin in a prop shop, but we still have to size right. So if we take that trade when VWAP left the range, and we measure this is what we do here. Say if this is going to continue, it shouldn't make a new high. So when VWAP left the range, when we take that settlement, I'm taking this trade, I have to risk new highs. And I think it wasn't a small amount. It was like
About
$50.
17 points. When actually probably even more. By the time VWAP left this range, we're all the way down here. Yeah, you're talking about 30 or so points.
$30, 300 on a micro.
And that's placing risk based on market structure, right? And this is where, we talk about all the time. You have to have a process, right? Could I trade gold and say, hey, I only want to lose $200? You could, but on a 1 minute chart last night, the ATR was $4, which is pretty expensive. So if you're trading it with a dollar stop, and somebody might look at this and say, well, why does the stop have to go over there? That's a stop based on structure, right? Now, are there other points of invalidation that you could use? Potentially, right? You could look at VWAP. You could look at maybe a swing high or low. But I think what Coach Paul is kind of getting at here is, if you're not willing to take risk in the metals right now, it's probably not worth trading it or even looking at it, because there's just inherent risk
Massive.
in any trade that you place, an increased risk in any trade that you place right now in the metals on either side.
Which, when we see the flow, now I will hand it off to you for that opening range trade you took this morning.
Let's take a look. So we took the opening range trade. Back to basics. The simple way we were taking the opening range trade. We had a 1 minute opening range. Gold opens up at 8:20 Eastern, 7:20 Central. And as soon as it broke to the downside, we didn't get in right away. We could have, because another one where the flow at this point was negative. It looks very much like the open last night, but we tested the high of that range. Really no interest in buying it. We hold at 50%. I think JD got in at 44.74, and another one where that volume leaves the range to the downside. And it's just not, at that point, not a move that you want to fight. I know there were some traders in the chat talking about, hey, you know what? I'm going to buy it, right? Here's a good spot to buy. And that trade, I think, looking to buy these markets is price alone, right? Only looking at price and saying, oh, it's at 4,400. I'm going to buy it. And could that work? It could, right? But the thing is, and with any trade that you take, you could sell it and be selling it in the hole and get the direction right, but still lose on the trade. But the flow of this market was to the downside, right? And for the day at least, we know higher time frame, gold has been making new all-time highs, silver's making all-time highs. But when something changes, a turnaround in the market, a bear market, right? If we see a 20% correction in the NASDAQ, it starts with 1 day of downside, right? So you can look and say, yeah, this is a higher time frame uptrend. But if the day time frame is telling you that there's selling coming in, it's kind of hard to fight against this. And if we look, how many real opportunities were there to buy this market? Here's a 20-point move to the upside, another 20. So they're there, but when the flow is this heavy, it's are you trying to catch a knife buying this? Maybe you wait until the knife is on the floor before you try to pick it up, because that flow was extremely aggressive to the downside today across the board in the metals.
And you can't, if on a price basis, you can do that.
Yeah.
It's to me, it's a little harder. I like to see the volume.
Right.
Volume leads price. Without volume, price goes sideways.
Right.
Period. If there's no bid and offer, there's going to be change. But it comes back to this. You can do that, but you have to be consistent, and you have to measure your risk at the least. Because if you're just the price and you don't have risk decided beforehand, I know, at least for me, and I've worked with hundreds of traders, if you don't have that defined before you enter, you're relying on emotion. Now, can that be done? It takes a Herculean effort. But going back to that, when did volume show that it stopped? We had a few, those spikes of selling volume.
Yeah.
Not even the highest, but when we finally did, it was exhausted selling. Not a classic J trade, because it wasn't the highest of the day, but that low was twice the average volume.
Right.
And then what's next? It has to break that high. On the stairs down, there was high volume, didn't break the high of that candle. High volume, this one was different. It broke the high, and that is the definition of a dead cat bounce. It's just the selling stop.
Yeah.
There was no stepping in going, this is a great price, and let's allocate and buy some gold. It's just the selling
probably some short covering after, what
Yeah.
might have been the biggest, and Andre was talking about this during fast markets. This might have been the biggest intraday sell-off point-wise we've seen in gold ever.
I'll I'll step up.
Yeah, it is.
Maybe not on a percentage basis.
Yeah.
And I was there for the collapse in 1981.
Okay.
I actually was marking a board with the prices. A 200 with today's range in gold was $261.8. Yeah, it was. Now, percentage wise, maybe not. And that's a good question.
Yeah. Percentage wise, maybe not, but dollar wise, for sure.
That
it had to be
dollar
close.
wise is dollars, right? That's volatility.
What's crazy is it's not. We'll see. I might have to go back and take a look, but it looks like the last one. Remember that October 21st candle, everyone? That we were. Doesn't this look very similar?
It does.
This looks almost exactly the same as the October 21st candle. Right? We had kind of slow grind up into it. We made an all-time high the prior day. And then we get this aggressive sell-off. Not as much volume on the downside today, but that had to be the closest one.
Yeah, very similar. But this one's changed. It is that margin, the cost to carry. There's another factor here. Tax season.
Right.
Profit taking. Well, I say that's why that bottom was made that way. It wasn't the selling stop. Two things that cascaded. This is the end of the year. Gold has been the star.
Yeah.
If not the biggest percentage gainer, I think so. Now, big money has got two things. They would like it to stay up high because if you want, for tax reasons, if you want to roll it into the next year, there's all sorts of things. If you liquidate, now you have to take that tax from 2025, but you'd rather take it in 2026 if you're going to take a winner and extend that tax another quarter or a year, depending on your circumstance. But in this case, being in the end of the year, there was so many different factors coming in here, and it was outside of normal circumstances. It's not surprising.
Right.
Is it the top? I don't know. I won't know.
Nope. We'll know when it's over. We will know when it's over. Let's take a look at silver really quick. Silver, another one, it did make new all-time highs today. That is the highest volume candle I'm seeing on a daily in silver. Going back on this chart, 5 years. That was an aggressive sell-off today in silver. That's where, what is it, $25,000 now? Margin requirement?
25. From 22.
From 22.
Which isn't a small change. If you're managing a fund, that cost to carry is a load.
Yeah. Another one that in that first half an hour at least made it the new all-time high. Let's take a look at the first minute candle and see if it was very similar to gold or not. A little different. Again, the big spike. This is almost a $2 move in silver right off the open. And that was really it. Look at the flow. The price moved. Price advertised higher. Everyone is all of a sudden a silver investor, silver bull. And
expert.
I knew this was going to happen. And then shit starts to get a little scary because it stops going up, right? You open up this way, everyone starts thinking about $100, and there is no flow to the upside. Now, does that mean that this move is over? It doesn't. But if you want to trade this is where, you have an approach where if the flow does not continue, there is no trade to the upside. And that's really what we got. And I think today was a perfect example of when you buy something and it doesn't go up, what happens? Because, again, there were a lot of people on Friday talking about holding silver positions and buying silver. And if it doesn't go up, what happens? There's panic. When it becomes more expensive to hold on to the position and it's going against you, what do you have to do? there's probably some liquidation, right? There's probably some selling that comes in here, and liquidations can happen both ways, right? We everyone's talking about this bank position. No one ever said what bank it was. Could it just be fabricated headlines? It could, but liquidation could happen to the upside as well, right? Where we could see buying if someone's short and you get a short squeeze, and maybe that's what this entire move was up to this point. Who knows? But really aggressive sell-off here in silver. Again, another one that made new all-time highs, but if there's no flow to the upside, this is where, again, volume matters, in my opinion. There's no one out there buying it. How is it going to go higher? And if everyone's already long, I don't want to be the last person at the party, right? So we all rush for the same door, and that's how you get this liquidation type of selling. Anything you want to say about silver, Coach?
Yeah, there's a couple good questions here. Physical silver is trading $85 in China, and paper is traded at 71. How does this price discrepancy reconcile? That's called arbitrage, and that's a deep history. It's a great question. One of the differences between silver market now and silver market in 78, 80, when the Hunt brothers and the silver mania, when it went to $50 from $3 in a couple years, or 3 or 5, I don't know, is the Hunt brothers tried to corner the market through the futures market. Futures market is a derivative. Its value is derived from the cash market. It's highly leveraged, and it goes to an exchange, which can say this is emergency market liquidation only, and that's what happened. In this market, in China, which is the largest producer of silver, they're not going to offer it out to the world unless they're going to limit how much silver comes out. In other words, they're leveraging the cash market. It's a completely different animal. They own it. They have it. So if we're looking longer term, it's a different animal. It's a different market. How does that relate to your day trades? It doesn't, except for it's going to create more volatility. So, one of the things I looked at, I looked at that failure and I wanted to sell it. I'm like, okay, where can I make a reasonable stop?
Yeah.
And it wasn't reasonable.
Oh.
Now, looking at that, I go, oh, all I have to do is sell it there, buy it here, and collect. What was the range today? The range was almost $60,000 in a big. So we had a range of $12.50.
Yeah, $62,000. $62,000. Yep.
All right. Even on the so on a micro, that's $6,100.
No, it's not. Remember, the micro's a fifth.
Oh, is it a fifth?
The micro's a fifth. So it's about
a fifth.
$12,000 range.
So $12,000.
Yeah.
Yeah.
And of course hopefully you're not holding for that entire time. But again, just increase margins, increase risk in these markets. A ton of volatility. And I think in this volatility, and we'll see it, again, shout out to Rips. I had a hell of a day trading this market. But that's a function of being able to trade size as well in this market. A lot of people are going to do the trader math. They're going to measure it and say, man, if I got short up there at the highs, I just held it. I could have had my biggest trading day ever. Could have made $50,000. Could have made, and the charts do a really good job after the fact of aggregating the information and making it look really small. But when you're in it, that's some big swings here. I'm looking at this. Let's say you got short at the high 82. Let's say you got short 82 145 at the low of this move right here. On a one lot, you're up 30 grand. Just this pullback, which is a natural fluctuation of the market, right? It didn't even make a new high. From that pullback, you go from up 30 grand. That's a $23,000 P&L swing. If someone is to hold this. In hours, right? So if you're thinking like, oh yeah, I could have caught this move, you do the trader visualization of, yes, I could have gotten short here, I got out here. But in that visualization, make account for a $23,000 P&L swing against you before you get to the profit target, right? And if you're comfortable with that, then these are trades that you can catch. And if not, then you figure out how to take your piece of it. The Jackal 100% takes a special mindset, right? And really what that mindset is I don't care about the result of any given trade. If you care too much about the result of any trade, it's probably because it's too big. Somebody caught this entire move in silver, I'm sure. But that was probably just business as usual.
One person, maybe.
Right. That was probably just business as usual.
But going back, it's about, can you afford to trade it?
Right.
So, like we said, a $30,000 move, and it was 25,000 and a half an hour, I believe. All right. On a prop account, which, okay, I'll take that risk. Well, first of all, you were really relying on a one-way move.
Yeah.
In reality, if you had a one lot, you could blow $6,000 in that half an hour.
Oh yeah. Easily.
Right. That's if you knew this was coming, by the way. And this is all looking backwards.
Yeah.
In the present, there's an opportunity. I defined my opportunity. I didn't want to take the risk. It was too much for me.
Yep.
I have no regrets not taking it. I was right on direction. It's
too much risk. Too much risk. And that is okay. I think that's important to know as a trader, right? And we say that in these extremely volatile markets, but that can apply anywhere. You may like the NASDAQ and you can read it really well. Can your account afford trading the NASDAQ? And if not, maybe there's other places for you to go, right? The micros, the S&P, the Russell, something like that. It's not about, oh, I can't trade this market from a technical perspective. It's literally from a business perspective. Can I afford to trade this market and take the risk that comes with trading that market? And if not, that's okay. Again, these are markets that the volatility or the silver is up even with this sell-off for the year.
That's a good point.
Even with the sell-off is up 120%. These are not the same silver markets as a year ago. So just keep that in mind. All right.
Yeah, and going forward, the volatility is going to be there.
Oh yeah,
it's not going to present. This is said. We talk about it all the time. Predefine your risk before entering the trade. If not, you will get run over.
Yeah.
All
right. Just taking a quick look at platinum, another one down 15%. We've seen this market probably, honestly, one of the crazier runs we've seen. This was 11 days, 9 days to the upside, one red day, and then back to it. Look at the daily ATR in platinum. In the beginning of December, it was at 62. It's doubled in the month of December. 131 points now. Platinum used to be the metal that I would go to if gold was a little too volatile, because but even now, put on a one lot in platinum in a practice account and see how quickly it moves. It's a lot. And now, again, there is opportunity in that. But opportunities go both ways, right? And just have to keep that in mind. Another one, that had some urgency to the downside. This is even in platinum. Again, a pretty expensive move here. All right, anything else on the metals we want to talk about, Coach Paul? We are under the 200 moving averages in most of these on the 30-minute. Here it is in gold. That's that white line right there. We're well below the 200 moving average, 45.02. Here it is in silver. Tested it a couple times. Here it is in platinum. Well under that as well. And that's the first time since December 10th in platinum. Gold, let's take a look. That's the first time we've been under it, and we got under it and went. First time since December 18th. Yeah, go ahead.
If a lot of people dreaming of swing trading.
Yeah.
It all looks great.
Mm-hmm.
Can you stomach today's move?
On a swing, right.
And liquidate without turning back and going, I should have got out. Mm-hmm. I knew it. Whatever. That's I mean, look at that move. Let's measure that from the 200 to where it closed above it till today's yeah, from last time to close underneath it.
18 days, 622 points of platinum.
Yep. That's 600. Oh my God, that was a huge trade. Now, that's what, $3,000 on a one lot?
I think it's more than that.
No,
in platinum,
30,000.
Yeah, 30,000.
I left the zero out.
Rounding error.
Rounding error.
Right. Swing is in go long for alza trades. No, a swing trade is basically holding a trade for more than a day.
Otherwise known as position trading,
which we can do at Topstep accounts, but you can in a personal account, again, if you have the margin to cover it. 150% in platinum since March, which is insane to see. Anything else you got on the metals, Coach Paul? We want to move over to
one quick peek at copper. What did copper do today?
Very similar.
Very similar.
Copper on a daily, engulfing candle. We talked about this, right? We trade through the high of this candle, or do we reject? And the answer so far has been reject.
Friday it looked like it was going to.
It did.
I wouldn't get short.
Yeah.
But we get new information, and that's why that opening is so important today. And with all of them, that opening first half an hour really set the tone.
Yes, it did. That set, not in copper. In copper, we did look above that high, but again, no flow to the upside on this move here. Dante says, can you go over again how to hover over the ATR on a candle to understand how many ATR? Well, sure. Can you guys see this value above my head right here, right? This white number right here. That is the ATR. Let's go to something like the NASDAQ, and you can see this ATR value change. Right now, it's taking into consideration, you see the 14 here, the last 14 candles on whatever time frame that you're on. So right now on the NASDAQ, I'm on a 30-minute chart. So this is the average range for the last 14 30-minute candles. So as I continue to go throughout the day, and you're normally going to see this, the ATR pick up as volume picks up. So in the overnight session, the NASDAQ ATR was 24 points. Right. But as we get closer to the New York session, you're going to see that value start to increase. Here's 8:30 Eastern time, an hour before the open. Now we're open, 41 points, 45, 49. So as the session comes in, we're seeing that increase. Right. So that's what you would do. You could do it on any time frame. If I was on a 3-minute, you could see it. If I go right at the New York session open, the ATR on the 3-minute is 19 points. What is that taking into consideration? What happened during the pre-market hours? But let's go 14 candles into the New York session open. What is it now? Right, it's 27. So that volatility increases as the volume increases. If I just went regular trading hours with this, you'll see that the average range during the New York session is about 20 or so points on a 3-minute candle. if not more, right now. And again, that volatility is going to change as the volatility in the markets change. 20 points is actually pretty low for the NASDAQ, just because everyone's looking at the metals right now and maybe not trading the equities. What are we seeing on the daily in the equities, Coach Paul?
Really not much.
Yeah.
The candle. What's the low? And that's your candle.
Yeah, 25,635 quarter is that October 10th high, and these are back adjusted charts. So if you, depending on the chart you look at, you're going to get a different price. But if you're trading on TopstepX, this is the candle that we're talking about. It was the low today was 25,648, so we didn't get there exactly. Right, there is a little bit of room there, but it's what we talked about during the opening call. It's what we talked about on Friday for At the Buzzer. The equity markets, they look kind of heavy, but heavy in the sense that no one's interested in trading these because everyone's trading the metals is what it looks like. It doesn't look like a ton of selling coming in. It's just, why am I buying that if the if the metals are presenting, asymmetrical opportunities right now?
Yeah, but another thing comes back. It's the end of the year. This is the last couple trading days. There's tax considerations there also. When you see a market like gold and silver with extreme, or the metals with extreme volatility, you also get liquidation outside of that market for margin or just to take risk off the table. Fund managers will do that. They gave back some money today, and they might just, someone will liquidate other positions and bring down the portfolio risk. A bit of contagion. And we look at that daily chart, it's very, very reasonable. It was kind of a dead day.
Yeah.
It didn't feel like it was tough trading in there. I didn't, but look at the volume.
Yeah.
This is
lower
the
than,
first
below
trade,
average.
way below average. A tough trade.
Sure. A couple trading days left in the year. End of the year coming up. Is that significant? A new yearly candle? It can be. We don't have yearly candles here, but maybe tomorrow we'll look at some yearly candles on TradingView. We are for some of the markets that we trade.
We could look at the monthly real quick.
Yeah,
or we could save that.
Yeah, let's do it. Let's do it tomorrow. Let's do it tomorrow.
Yeah.
All right. The S&P, very similar to the NASDAQ. I mean, this is just regular trading hours. VWAP never left that first half an hour range. Everyone is trading the metals right now. And there was a decent sell-off last night. There was a decent sell-off. Can we compare how the YM moved? Yeah, we can take a look at the Dow. What is that white line?
The 200, and it traded around it, but volume settled underneath.
Yeah.
Volume as in VWAP. But looking from last night, once again, it looked a bit like gold and silver without the drama.
Yeah.
But I'm from a flow point of view. Made the high. We did tick above it, but
no volume
VWAP didn't. And in Europe, they said, okay, the selling's good. But look at the shape of VWAP. It was a slow grinding trade overnight. That opening this morning, we go to the 3-minute. And it had a false, to me, from our point of view of that opening range breakout.
Yep.
By the way, I want to show this because no, it doesn't always work. If someone tells you something always works, run from them,
Yeah.
because it's a game of probabilities. And they had urgency.
You were able to get a 1-to-1 if you got it right on that close, if you entered right on that close, but just no follow through.
One thing I will show, well, one thing here is look at, the volume after the opening. That's a J trade early.
Right.
So buying with the after the opening, this is the largest until the close, the largest volume. Made new highs. It was urgent, and it just stopped. The last buyer came in, and it was a big candle.
Yeah, it was.
Just seeing that, that's very bullish to me. Now, more information came in. To me, that information was the close underneath that candle from the high. That's the risk. If you bought it, for me, that's the risk. Just take the small loss. If you're over leveraged, well, that's your problem. Don't over leverage. But it cut it off, and it was sloppy. I can't say any other word than it was sloppy day.
Yeah. A lot of back and forth action. S&P, I don't believe got down to that October 10th candle. No, it didn't. We're way above it. But a lot of back and forth action. Range traders, maybe this is where you can trade the equities and feel comfortable. But not a whole lot here. Let's take a look at the Dow. Dow, a little bit of a different story. I'm going to zoom out. Can anyone tell me what that low is right there? I would guess. Oh, it's not the October 10th candle. Huh, I wonder what that is. October 10th candle in the Dow is all the way down here. Why did we mark out this range? Meant something at some point. Probably an opening range or something. But Dow, nice rejection at 49,000 today. A lot of these charts look very similar. But here's the Dow open. Here's that first 30-minute opening range. We took a look up at that range. Another one where it looked like it was going to break out initially, but this is a different story a little bit in the Dow here. Here's that first 3-minute candle. Volume never even tried, price never even tried to leave that range to the upside. The Dow is a nice trade. The Dow is a nice trade. There are a lot of times where you'll see a pretty volatile opening candle in the Dow. Whatever reason, it seems like the one that just jumps out of the gate first. Most days. But it is a pretty nice trade here. Failure of buying up here at these 49,000s. When you take the trade, that depends on your trade strategy, but really nice rejection up there in the Dow. Yeah, that was an opening range from prior day. If you like the Dow at 50K, you'll love it at 49K. And all right, there we have it.
Buy more.
Anything else you want to talk about in the equity markets, Coach Paul?
Oh, let's take a quick peek at our cousin.
Looking at the Russell here. It's very similar to other equities. What are you seeing here?
Not much. There was a sharp buying on the opening. Very much like the Dow. Look at that opening range. I saw that and I was like, well, I won't be trading that today. And why do I say that? That's a very large opening range. And it wasn't great volume. It was the highest of the day. But it took, overall, wasn't huge. It took average volume for an opening, created that big of a range.
Right.
Now, to me, that's a red flag. It means
it's not a lot of interest there.
It's thin.
Yeah.
So I just want to go through, look at that. That was 80% of the range was and I think that in the first couple minutes.
Right. That was a 3-minute I just mapped out there, but it was, yeah, first 2 minutes, first 2 1-minute candles. That was the range pretty much for the entire day, which as a range trader, maybe you welcome that, right? If there's this much range on that low volume, up doesn't go with it, this could be a sign that, there's potential. It's like looking at a news candle, right? We frame out the news candle, we see the reaction, and then immediately after, there's no follow through volume. That could be a fade that you take here. The question is, where do you establish your risk and reasonable targets for the outcome of the trade? Do you look on the other side of the range? Do you go to 50%? But if you're looking for a momentum continuation trade, it wasn't in the equities today.
No.
Right.
All right.
I think that's it. We can talk about crude oil really quick. Crude oil.
It tried.
It tried. It tried. Yeah, that's about it. Inside day. Stay inside crude. Stay inside. Everyone's playing with the metals, and crude is looking out the window like, hey, is anybody going to trade over here? We don't have to belabor the point here in crude oil. Any other markets you want to mention, Coach Paul? We got 1 full trading day left in the year. Any other markets you want to talk about?
Whoa, what haven't we? Oh, bonds.
Bond market. Interesting. Okay. What are you seeing here on the daily?
Don't trade it. Why bring that up?
Okay.
And bring up the half an hour. This is why I wanted to bring it. I'm not trading it.
Yeah.
The moves are made in half hour and then they die.
Right.
If you have a way to trade that, this is a place for you. And it's been that way. We just saw that Friday. We saw that today. We saw it on the Fed day. It makes it tough for day trading. It's a stale market. All the trading is done at spurts in half an hour, and then it dies. I don't trade it anymore right now. There's just other things to do.
Right.
I just wanted to bring the 10-year the same way, 5-year, 2-year. Treasuries are. So you see that move, and then we're trading inside of it.
Yeah.
If you have a way of trading those, have at it.
Right. But if you're looking for breakouts, another one, just not happening.
Yeah, and I don't. But if I should put that, if you have great opportunity here, if you know how to define a good range trade. Other than that, the currencies are dead. And I think most of these things are going to be dead until next week. I wouldn't even say Friday, first day of the year, being 1 day, maybe. But I'm saving my gunpowder. I won't be trading. I traded a yen last night. It's the only one that showed that I could afford to trade. I didn't want to take the gold or silver. It had some urgency at buying. And it's the yen. So it was tame. Other than that, don't ruin, if you've had a good year, don't ruin it trading the last couple of thin days. Unless you're very disciplined. And by the way, if you're up this year, you've made good money, you're disciplined. It's not a luck. Follow your process, but don't overextend yourself. Keep planning your trade your plan, manage the money in your account, and you can eliminate as much randomness as possible. With that, we will talk again tomorrow.
Awesome stuff. Thank you for that, Coach Paul. We do have Coach Hoop doing his class in Discord, 6 p.m. Eastern time. Then Coach Ray and Coach Vince, 7 p.m. and 8. Dakota's on for slow markets tonight. I will be on with him for slow markets. We got Aaron with the London Open, D with the Euro trade. We'll be back for the opening call for the last full day of 2025. We want to appreciate and thank you all for being here today. If you haven't done so already, hit that thumbs up button on the way out. Trade well, manage your risk, and we will see you all soon. Thanks.
Bye.
Bye.